Bitcoin's pulled back over 20% since its top in July. This is coming out relatively similar to what has already happened in the past for 2023 pullbacks. The SP 500 is also in its single-digit pullbacks, dead on the 50% level. Stuff that we've been covering here for many, many weeks, months, and even years, looking at key support and resistance levels throughout this cycle of the uptrend. Now, these are unfavorable things to say in the market, especially when there are a lot of bears calling for big downside targets. But we'll get into that in more detail throughout the video. First up, make sure to hit that like and subscribe. There's about 30% of you that aren't subscribed. Come on, let's push this thing to 290,000. Links in the top of the video description if you want to join our TIA premium members, crushing the trades. This link in the top is going to give you a free trading guide. It's going to give you free Discord and then also a free crypto and economic report. So well done to you guys, members who are crushing their trades here while the markets are turbulent. This is just since the last video as well. 37, 122, 46, 154%. These are on longs and shorts in altcoins and Bitcoin. But of course, the plans can be used across stock markets as well. This is what we use for our long-term and short-term investing. 51, 164, 138, 30, 111. Well, absolutely well done to you guys. 12%. And even the smaller ones here, even if they're at 30% as well. So congratulations. I've got plenty more to get through in the next videos. All right, guys. Let's take a look at where the news cycle is at right now as we see a few more days up for the SP 500. Typically at these low points in the market, it's what we're looking for to be buying up. We see extreme market sentiment to the downside, big calls for numbers further down below previous support levels. And then we also see support coming in on price amongst that same market sentiment getting really, really bearish. What do we see towards these lows? Even in June, like we were talking about here on the channel, we're looking at June lows coming in around that 36, maybe even 35, which we ended up getting 3,500 on the S&P. Now we're looking at the S&P before we get to Bitcoin. Obviously, it is the leader of the markets out here. It's running the show. It's where the most money is in the world. So we need to know where that is going before we get into the lower beta plays, the stuff that has more volatility and potentially gets us more money. Okay, so to the downside, we've got October, the cycle low so far in 2022, hit 3,500 points. When we saw that coming in, all of the calls were for lower prices. People were looking for 3,200, they were looking for 3,000. If you recall, they were even calling for further downside to break the COVID pandemic low of 2,200 points. It didn't happen. Market pushed, had a pullback, another push, had a pullback. Each time they were calling for the next low in the market. They were calling for prices lower than 3,500. But note what happened. And this is exactly the same thing that happens in Bitcoin time and time again, especially when we're in an upcycle. They were calling for 3,500, a breakdown of the low. It didn't happen. And that keeps a lot of people mentally on the sidelines and physically with their cash in their bank or in their accounts on the sidelines. Now, I'm not telling you to buy, but I am telling you to watch out for the fear at the bottoms of the market. Is this the exact bottom? I don't know. I'm not going to tell you whether it is the exact, because I don't know whether it's the exact bottom. But it has many hallmarks of an exact bottom, but could potentially be another significant low. Just like June was. June 2022, last year, wasn't the exact low for the stock market, nor was it the exact low for Bitcoin. But it was very close to the low. And if you were buying at that point, and sure, you see the market go down. If you've got the balls to hold in for that period, then you've got some very, very significant upside. We'll look at that on Bitcoin as well. But when those lows come in, it is the most fearful. Every time a low comes in, it is the most fearful time in the market, relatively speaking. So relative to what we've seen since probably June period when the market started to break out. This has been the most fearful time. We saw a lot of fear back in April and May, but it looks like absolutely nothing now on the chart when you look at price, and price is what we trade. This fear was around US debt ceiling crisis and regional banks collapsing. No one even cares about this anymore. And I suspect, and I said this at the time before, and I said this at the time before that, and the time before that, this one here was the banking crisis. And I said in a few months, no one's even going to care about this. You can go back to the videos. No one even cares about the banking crisis now because we have the US credit ratings dropping. We have China property developers collapsing. It's the same thing over and over again. 2021, we had Chinese property developers collapsing. We had Evergrande, or Evergrande, as the way I like to say it, the Italian way. The market was collapsing at that point. Look at the prices. I'll leave that one to you to figure out where we are in the news cycle. But if you want my opinion, then I would say it's the same thing over and over again. Most miss out on it, and most don't make any money from the markets. So we're at this level of support around 43, 4,400, and we're hearing 4,000 is the next price point. We're hearing 35 is the next, or 38, I should say. These are the lows here, and 3,500 is the low. We're hearing the same thing over and over again, that these markets need to collapse further. It's not ready yet, etc., etc. So we're seeing similar hallmarks to what we saw in the last push down into that low, and again into the cycle low. These were on major 50% levels. Take a look at this. We've got the cycle low to the cycle top, dead on 50%. If I get that exact, dead on 50% right here. And the market has springboarded away from that. Now, we've covered a lot of data on the channel, which I'm not going to go through again today. Otherwise, the video is going to be an hour long, looking at why this was potentially a very, very good low, and why this also was a very good low. October and March, going over decades and decades of data for these areas to be lows. So I suspect we are going to be putting in another low, whether it's now, whether we get a bounce up and test some higher prices, maybe it's September, but sometime in this period of, say, Q3 into early Q4, that's going to be the grind before we get a move out later this year in 2023. Now, I think we have to hit a new all-time high late in 2023 or first half of 2024. This is all part of the news cycle. I'll just quickly mention, I've got a lot of the news cycle here before I get to that all-time high. Markets climb a wall of worry. This is what a wall of worry looks like. We're seeing it happen. Guys, we're seeing it happen. The wall of worry. Problem after problem after problem after problem. And the market goes up and up and up. Remember, we trade the price. So if you want to make money, you got to trade the price, not the news cycle. Now, to try and remember these problems, because we forget them very easily, I've got a pinned post here. Let's smash this up to 80,000. We can do better than that. But anyway, my Twitter is in the video description. This link here, I will post all of the walls of worry problems that come up in the markets throughout the cycle. We've got a problem happening right now. The US downgrades, we've got China collapses, all this sort of stuff. It goes in here. So pay attention to that and bookmark it if you have to. Okay, so this is the shorter term outlook. We've hit on our 50% level now, and we're having a bit of a reverse here for the SP500. There it is, 43.50. It's been 3 weeks down. People are acting like this has to collapse to new lows. Note what we've seen last time. We saw an 8.77% downside for the banking crisis, which now prices are up 20%. And we saw 6 weeks down into that period. So it's probably not going to be too uncommon if we saw something similar. But let's just take it day by day, week by week. We got 3 weeks down at just a 6%. Remember, we said single digit downside. We're not over yet. The confirmation would be a breakout to the upside, but we're still looking at single digits, and anywhere down to these support levels is still single digits. There you are at 9% to the 4,200 point level. So far, this is where we sit. I'm probably looking at a little bit of a bounce from this point, and let's see how the rest of the quarter plays out. Now, something around the title. This is not a good time to sell. As I've covered in the beginning of the video, looking at market sentiment, looking at price support levels, looking at timing, probably not a great time to be selling after that point. I'm not telling you what to do. I'm just looking at the data in terms of what we see on the charts and what happens next over the coming months. This is a look at the 10-year Treasury yield. A lot of people love to look at the 10-year and the 2-year and saying we've got an inverted 10 and 2 and we're going to get a recession. We've covered this as well on the channel, looking at the data. I know that comes up quite a lot, and it should. You know, people are expecting a recession to come. The problem with the 10 and 2 that everyone references is that there is a period of, it could happen in 6 months from the point that it inverts. So it's when you get a higher yield for a 2-year than a 10-year. typically you should be getting a better interest rate for a longer term. You've got your money in there for a longer time. There is a time frame from 6 months, 6 or 7, all the way out to about 49 months. 49 months is 4 years. So when you get this signal, is it helpful if you have a signal that could tell you a recession is coming in 6 months' time or in 4 years' time? I don't think it's very valuable as an actionable indicator. Yet, you tell me if I'm wrong. I see 90+% of people talking about the 10 and 2 saying we're going to get a recession, we're going to get a recession. It's not helping us in the market. It's not helping us get the gains to the upside. And that's just purely looking at the data, not my opinion. So what do we have now? Well, the yield on the 10-year Treasury notes recently broke out to a decade high. In case we want to have a look at what's the 10-year Treasuries. These are the federal government maturity rate. These are the ranges, that go from weeks to years. We're looking at the 10-year here. These are Treasury securities that are loans to the federal government. A rising yield indicates falling demand for Treasury bonds, which means investors prefer higher risk, higher reward investments, while falling yield suggests the opposite. Let's have a look at the data. That's all it is. That's all it is there. Over the past 60 years, significant breakouts in the yield have preceded gains. Well, what? It has gains in the S&P 500 every time 6 months later. I don't like the old every time, because eventually you'll have enough data here. Maybe you get up to 80 years and one of the times out of 10 doesn't work, which is absolutely fine. Nothing needs to work 100% of the time. And you may say, well, now is that time that it's not going to work. Okay, you do you, but right now it's working pretty well. And I'd like to put the statistics on my side here. A new major breakout in a competing investment here. This is the chart that we're looking at down below. In prior decades, big yield breakouts were much more damaging to stocks. So in prior decades, this is back in the 1800s. So we're looking at just this recent history, and you could say, all right, well, let's go back to the 1800s. Absolutely okay. We've done it before. Let's have a look at what we got here. Every time so far we get a breakout in the 10-year treasuries, it has been preceded by gains to the upside. Obviously, gains are to the upside for the S&P 500 over the course of the next few months, possibly up to 6 months as well. A big breakout in yields were not a good sell signal lately, and lately is referring to the last 60 years. We're going back to 1962 here. If you want to go back earlier, you can do that, but we're looking at the last 60 years. Okay, so 2 months, 3 months, 6 months later have almost all been 100% gains to the upside. Here is the one that was flat in 1967. So you're not losing, you're not winning. And then the other time that it didn't work was 0.7% loss. All the other times has been upside over the next 2, 3, and 6 month periods. You get into 12 months later, and we've got a couple of negatives here, 1965 and 1981, okay, which was the 1982 fall down as well. So 10% and 5%. Otherwise, you got 7 out of 10 hits to the upside 12 months later. And we've been covering this data since 2022, early of 2023, and now we're in the second half of 2023. And the majority, not all, but the majority of the indicators are showing more upside potential. We need corrections. That is going to be very, very healthy for the market longer term. Now we've got longer term stuff to get into for the all-time highs for the S&P and what that means for Bitcoin as well. But if I could ask you, you know what to do. Hit that like and subscribe button. Let's crush this thing to 290,000. And then if you can, go to Twitter, 80,000. Thanks very much, guys. Okay, so BTC and the relationship with the S&P 500. So what we've seen with the S&P, and we've covered this on the channel before, is breakouts on the S&P are typically within the Bitcoin accumulation. Or we could say Bitcoin accumulation is typically within the first lot of breakouts for the S&P 500. We've had a bear market, a pullback here. We've had a Bitcoin bear market. In the S&P, there were still all-time highs, but it was basically in a trading range back here in 2018 into that, basically all 2018. Now in the accumulation stage, S&P 500 broke out once, had a pullback, broke out again, had a massive pullback, broke out again. So we haven't even had that first breakout yet for the S&P, meaning a breakout into new all-time high territory. And that's why I suspect it's going to happen in this period here, looking in 2023, 2024. This, along with a ton of other data that we've gone through, all-time high stuff, percentage away from the highs, but this is just one extra piece. And I think we'll probably see that, and then that is going to be the leading indicator for BTC to start to make its way up again like it has done in each of the previous cycles. You want to see that risk on coming back into the market, just like what the data showed for this treasury yields. Once we see the breakouts, that's a sign that investors are getting more risk on again, and we're starting to see that. It happens over a longer term time frame. Nonetheless, as probably the title's saying, this is not a good sell signal, and many are looking for that sell signal to the downside. I suspect over the coming months, we'll look back on this and say that that was not a great time to be selling. Maybe the market comes back and tests here, but when you look back, this is going to be at higher prices based on what we're seeing with the data. Just like what happened back in March, that was not a good time to be selling. Does anyone remember the March banking crisis low? It was crazy, and people were expecting collapse. Would you now be hitting yourself in the head, I don't know, with a fry pan or something, if you were selling at those March cycle lows? So it's really just a warning about what the data is saying, what the charts are saying, what the market sentiment is saying, so that we don't make the same mistakes again. Remember, what I do here is study the past to forecast the future. It doesn't happen 100% of the time, but we're throwing the probabilities more so on our side. Also, link, as I said, guys, top of the video description. You can get on board with our free Discord. Go and check out the results here from many of our members. You got TIA reviews as well for the Investor Accelerator, and of course our free crypto and economic report, which is coming out once every 2 weeks. So that's what I'm looking at for BTC. Now I've got a ton of other things to get through, but let's just cut straight to the chase for BTC. The video's gone on long enough, and I'll get to those in future videos, along with the fear and greed index, which is looking like pretty healthy, resetting there. That's what we want to see. Now, Bitcoin hasn't done too much since the previous video. We're holding above the previous low, yet the market sentiment has dropped below the previous low here in June. So the fear is there, but the price is still holding up. Let's have a look at that in a future video as well. The main thing we were looking at here was the average true range. We needed to get a spike out. Things were just dying off so much, and we finally got it. Now, there's two ways that this market can play out, and it seems like it's playing out the second way. The first way is that we get a spike and a reversal, and it doesn't seem like that's happening at this point. So maybe we get a similar movement like we saw for the FTX collapse. We had that big spike down, and the market just did not bounce away. And that seems to be where we're heading at this stage, because we haven't seen any sort of a move back. We haven't bounced back. And where would that bounce be? Or at least on my daily chart here, I'm looking for a bounce above 27.8 to at least reclaim some sort of strength in this upper half of the 50% level. So if we're going along some sort of grinding bottom, well, that kind of lines up with the SP500 as well. Maybe we get a bounce here and we start to grind away because of the cyclical, seasonal nature of this Q3 period in the markets. You know, this summer moving into what northern hemispheres are autumn. I'm used to the south where we go into the springtime. But essentially that could be a similar sort of play out, a couple of months, and then we get that going again in November, December, maybe into that first quarter of 2024. So we're going to keep an eye on these lows here. Same sort of thing is happening again when it comes to the lows. Extreme fear comes into the market. Everyone says you're wrong. This market's going down. You said blah, blah, blah. You know, everyone's talking about $40,000 and $50,000 price targets. But remember what happened just 10 months ago, November, 10, 9, 11 months ago, whatever that is. Hit 15K, it's going to 10, it's going to 8, it's going to 3K, and it springs up from there. Remember, this is the market sentiment. It happened exactly the same in the SP 500. We got to 19.5 on the banking crisis low. It's going to 15K next. We said no, and we were buying here. We're talking about buying a lot to our members in Discord because of the severity of the market sentiment and what price was doing at that time. It was holding up below the previous low, which was a very extreme news event in FTX. Everyone said 15K, market pumps up. This is over the course of months, another 3 months later. It's coming down, it's coming down. We're going to go to 20K again, and we get the move up. However, this move up is less, so we have to expect that this is going to take a little bit longer, and we've been up for about 33 weeks. There is no time in history in a bear market where Bitcoin has gone up for 33 weeks and then collapsed to new lows. Yes, it's only got 10 or 12 years of history, but that just doesn't happen where you go up for over half a year and then collapse to a new low. Now, I've got heaps to get through in the next videos, so hit the like and subscribe button. It does go a long way to helping out the channel. And as I've said, links in the top of the video description. Thanks again for all of your support, guys. The guys who've been here for quite some time and have watched this market come all the way up. Hopefully, you've been making some great gains like our members as well. I'll see you guys at the next video. Until then, take care and peace out.